The trade war between the United States and China has reached a fever pitch. On April 9, 2025, the Trump administration significantly escalated tariffs on Chinese goods to 125%. The new tariffs represent a substantial increase from the previous rates. This move came as a surprise to many analysts. It further escalates the ongoing trade dispute between the two economic giants. China wasted no time in responding to the American action. On April 10, 2025, Beijing announced retaliatory tariffs on a range of U.S. goods. The Chinese government has vowed to take further action if necessary. This tit-for-tat exchange of tariffs has heightened concerns about a full-blown trade war. The latest round of tariffs will likely impact consumers and businesses on both sides of the Pacific. American businesses that rely on Chinese imports face higher costs. Chinese companies exporting to the U.S. market face a similar predicament. The tariffs could lead to price increases for consumers. This escalation in the trade war comes at a time of growing economic uncertainty. Global growth is slowing, trade tensions are rising. The tariff battle between the U.S. and China is adding to this uncertainty. It raises concerns about the health of the global economy. The announcement of new tariffs sent shockwaves through global markets. Stock markets around the world tumbled as investors reacted to the news. The Dow Jones Industrial Average, the S&P 500 and the Nasdaq Composite all experienced significant declines. Asian markets were also hit hard, with the Nikkei 225, the Hang Seng Index and the Kospi Index all closing sharply lower. Oil prices initially plunged on news of the escalating trade war. The price of Brent crude, the international benchmark, fell by more than 7% in early trading. However, prices later rebounded after President Trump announced a temporary pause on tariffs for most other countries. The pause, which will last for 90 days, will see tariffs on goods from most countries reduced to a universal rate of 10%. Despite the rebound in oil prices, the overall market sentiment remained negative. Investors are concerned about the potential impact of the trade war on global growth. The tariffs could disrupt supply chains, increase costs for businesses, and dampen consumer spending. These factors could lead to a slowdown in economic activity. The market volatility highlights the high stakes of the trade war. The interconnected nature of the global economy means that any disruption to trade between the U.S. and China will have ripple effects around the world. Investors are closely watching developments in the trade dispute. They remain cautious about the outlook for global markets. The escalating trade war has drawn sharp criticism from both sides of the political aisle. Democratic lawmakers have been particularly vocal in their opposition to the tariffs. They argue that the tariffs will harm American businesses and consumers while doing little to address the underlying trade imbalances between the U.S. and China. Some Republicans have also expressed concerns about the tariffs. They worry that the trade war could damage the U.S. economy. Despite the criticism, President Trump has defended his administration's actions. He argues that the tariffs are necessary to protect American jobs and intellectual property. Economists are divided on the potential impact of the tariffs. Some argue that the tariffs could lead to higher prices for consumers and slower economic growth. Others maintain that the tariffs are a necessary tool to force China to change its trade practices. They believe that any short-term pain will be outweighed by the long-term benefits of a more level playing field. The trade war is creating uncertainty for businesses and consumers alike. Businesses are unsure about how to plan for the future. They are grappling with the potential impact of the tariffs on their supply chains and bottom lines. Consumers are worried about the possibility of higher prices. They are also concerned about the overall health of the economy. The trade war between the United States and China is not just a bilateral issue, it is a global concern. Countries around the world are feeling the effects of the trade dispute. They are taking steps to protect their own interests. The European Union, Canada, and Mexico have all imposed retaliatory tariffs on U.S. goods. The escalating trade war has raised concerns about a global recession. The International Monetary Fund, IMF, has warned that the trade dispute is a threat to the global economy. The IMF has downgraded its global growth forecast for 2025, citing the trade war as a key factor. The long-term consequences of the trade war are difficult to predict. However, it is clear that the dispute is already having a significant impact on the global economy. The trade war is disrupting supply chains, increasing costs for businesses and dampening consumer spending. If the trade war continues to escalate, it could lead to a global economic slowdown or even a recession. The trade war also has the potential to damage the rules-based trading system that has underpinned global prosperity for decades. The dispute is leading to a rise in protectionism. It is undermining the World Trade Organization, WTO. If the trade war is not resolved, it could lead to a fragmentation of the global trading system. This would have far-reaching consequences for the global economy.